Hey everybody, Bull Boom, and it's Saturday, January 23rd. Just wanted to bring you this economic collapse update and go over some information that I found just recently, and it's going to further point to the direction that we've been pointing to, that there is no economic recovery. The economy is continuing to fall apart. The level of support and free money and liquidity that has to be injected and sent out uh, to keep this system from completely noticeably imploding is getting off the charts. All right, most of you know we've got the $1.9 trillion stimulus that's being pumped out there, and we know a lot of this is going to end up at the mega corporations in the markets, and it's not really going to help the people that need it the most. And that's the sad truth about the so-called assistance that's being sent out that's supposed to help the people. Right? The people, the ones who actually do the hard work, the hands-on labor, they're the ones that get the crumbs from the king's table. And what we're seeing now is everything just not making sense fundamentally from a business standpoint, right? From a place where you should see prices fall. It's pretty simple, right? You shouldn't see inflation. You should see massive deflation when you see such high level of unemployment. All right, now keep in mind the official unemployment numbers about 3 to 4 times less than the real unemployment number when you look at all the people out of the labor force. All right, so we're going to talk about that. But the wool is being pulled over so many people's eyes. I think most people out there still believe that it was the infection and then the shutdowns that resulted from the infections, which many people would say was a severe overreaction. But most people blame that on the economic downturn instead of looking deeper into all the things that we've been saying even before the shutdowns. All right, people out there actually think the economy was rescued after the financial crisis and they thought everything was fine. Meanwhile, people are in more debt. The Fed's balance sheet has exploded way beyond the financial crisis levels. They were not able to unwind their balance sheet. There was no exit strategy. Right? It was impossible. They weren't able to raise interest rates back up to normal levels. And the insanity just grows and grows and grows. It's beyond bananas right now. All right, but most people still have no clue what's headed in our direction. And this country is headed for big, big changes, and it's going to be shocking. Even more shocking than what we've seen here in the past year or so. It's going to be even more shocking what's headed to this country. Business Insider article right here. Legendary investor Jeremy Grantham says Biden's $1.9 trillion stimulus plan will make the stock market bubble even worse. Now remember, for years we used to talk about how a lot of this money ended up in the markets, that the Fed, they were involved. And a lot of people at the beginning, they said we were crazy. They said there's no way they can do that. It's not legal. It's not right. And now it's just mainstream. Legendary investors are now just coming out and saying it. This is going to make the bubble bigger. Right? Most of the stimulus, most of this market assistance is going to make the fat cats even fatter. Meanwhile, most of the country is still living paycheck to paycheck. Right? And the ones that do have some wealth accumulated from this, it's usually in their 401k, and they're likely going to get penalized if they try to take it out of their 401k. And when the market is finally allowed to collapse, most of these people that see this paper gain, right, on their computer screen or on a piece of paper, it's going to be too late, because the big guys are going to be sold and gone and out of the markets. Meanwhile, Joe working 9 to 5 and Jill working the midnight shift, they've watched their paper wealth evaporate instantly when this thing finally is allowed to collapse. Los Angeles Times article, a full reverse. California's jobless spiked in December, thwarting recovery. Is that really a surprise? Is anyone surprised by this? When you force businesses to shut down, right, when you yank people's livelihood right out from under them, and then you act surprised when the so-called recovery reverses. It's thwarted the recovery. And this article goes on to say the unemployment rate in California is about 8%. We know it's really 3 to 4 times that number. Let's just take a quick look over at shadow stats right here to show you the real deal on the unemployment number. Okay, the red line is the U3 number. That's the official reported number. That's looks like about 7 and 8% right now between those two numbers. But the shadow stats figure puts it at between 25 and 27%. Looks like about 27, maybe a little bit over 27. So we know that the real number is about 3 to 4 times higher than the number that's floated out there, the official number. All right, so a lot of this is just number games and the way that it's being reported. Right, if people knew the truth about this economy, I think there would be a whole lot of panic out there right now, and probably a lot of outrage. If people really understood what was happening right now and how much of this debt that's created, the stimulus that's being put out there, it's not going to the people that really need it. And just like we predicted, we're going to continue to see the calls for more stimulus checks, a more dependent population, checks being sent out more frequently until ultimately it's going to be just a whole nation of dependents where you have basically non-stop welfare, and it's going to be most of the population is going to be on handouts and payouts. Bradley over at Twitter sent me the following link. This is a CNN post over at Facebook. In one draft of the proposal, the IRS would deposit checks worth $300 every month per child or younger than 6 years old, and $250 every month per child aged 6 to 17. This would give parents $3,000 a year for each child between the ages of 6 to 17 and $3,600 per child under age 6. So you see what's happening here. It's going to be more frequent payouts, universal basic income, until the whole nation is just dependent on payouts. And when this happens, where is the incentive to work? When you can just sit back and get paid, who is going to be, I guess, crazy enough to want to work a regular job? Who's going to want to get up, put on their work clothes, go somewhere for 8, 10, 12 hours, whatever your shift is, all right, listening to your coworkers and your bosses? Who's going to want to put up with that when you could just sit back, have kids, and get free money? Now, of course, this is not enough money to really ever dig anyone out of poverty. There's still going to be gerbils on the debt wheel until infinity. But you see where this is headed. I mean, pretty soon it's going to be absurd to even think about working because of the ease of just sitting back and collecting a government paycheck. Right? And the ones that are working, they are going to be told that they're going to have to give up a bigger portion of their paycheck to pay for all this. You see how this works? Right? Everybody, I think most of you know where we're at right now. You see what's happening. We need to continue to protect ourselves as inflation rises, and it's going to rise because production's dropping. Less and less people are going to want to participate in the workforce when more easy free money is floated out there. Less production, more money in the economy, right? More people spending, less production equals rising prices. And I see it all over the place. I see it in the cost of food, energy prices, housing is not coming down, utilities, everything's going up, just the opposite of what should happen in a non-manipulated, non-rigged economy. All right? This is what happens when you have an endless printing machine and people deciding where the money gets put. Instead of having a free market, you have a completely controlled, manipulated market, and that hurts hardworking people, and it incentivizes people to do nothing and be lazy and be complacent. Right? So when you incentivize something, you get more of it. Incentives. All right. Speaking of rising prices, Barron's article right here: shipping costs are spiking. That means inflation. That's what it means. Rising shipping costs. So in a global pandemic shutdown recession, unemployment spiking worse than the Great Depression, you have rising prices. Completely insane. Excerpt out of this Barron's article: locked down consumers are spending more on goods mostly made overseas and transported on container ships. This plus the related shipping disruptions because of the pandemic have sent costs spiraling. The Baltic Dry Index, a measure of rates to move dry goods, is up 128% in the year and up nearly 60% just since early December, right? Just since last month. Boosted by China, the world's largest exporter, reopening its industrial economy. All right, another article out of Barron's. Why Biden shouldn't let the federal debt deter a spending spree, right? So remember when people used to get concerned about the debt? Now it doesn't matter anymore. It's common knowledge that the debt is never going to be paid back. Of course, they're going to still say you have to pay it back out of your paycheck. They're going to still float that out there because people are too stupid. But yeah, endless spending, higher taxes, rising prices. Nobody's going to be incentivized to work. The people that do work are going to get punished. They're going to get their paycheck taken to pay for all the other people that choose not to work because why? It's crazy to work. You get free stuff. You see where this is headed? This is very dangerous, people. This country is in big, big trouble. Fasten your seatbelts. Should say 2021 is going to be absolutely insane, and it's going to make 2020 look like a walk in the park. Stay prepared, everybody. Stay safe. Stay well. Bye for now. Peace.